So how are you guys? Welcome back to my channel. If you're new here, my name is Sally Miruri and I do videos with legal conversations. So I get to have conversation with you guys, but also answer some of the legal questions that you might have and break perceptions about the legal issues in the jurisdiction of Kenya. Today we're going to talk about classification of taxes under the Commercial Transactions Law. I'm going to talk about 5 classifications of taxes. Number 1 being the income tax. I'm going to talk about the rental income tax, the VAT, which is the value added tax. I'm going to talk about capital gain tax, and the excise duty tax. So the income tax is tax that is charged upon someone's income, whether you're resident or non-resident in the country. So this could be employment tax, it could be tax that comes from the rental income, it could be tax that comes from corporate income, it could be tax that also comes from the digital marketplace. So the income tax is collected in a number of ways. Number 1 being the corporate tax. So the corporate tax, as the name suggests, again, is tax that is levied upon corporate tax, and it is that is levied upon corporate tax annually. We have the pay as you earn, commonly known as the payee. So this is a tax that is deductible from gainful employment, and it's done annually but deducted monthly. We also have what we call the withholding tax. So withholding tax is also an employment tax, but a tax that is deducted from an income which is not necessarily from someone who's not necessarily an employee. An example could be someone who's a consultant. So upon payment of a consultancy fee, there's a tax that is deducted from that fee, which is known as withholding tax. We also have advance tax, which is tax, again, as the name suggests, it's an advance tax. So it's a tax that is paid in advance to receiving public services like an inspection of a motor vehicle. And then we have the installment tax. So an installment tax is a tax that is paid in installments, as it suggests, but it is paid by persons who pay tax from 40,000 and above. So we have the second type or classification of tax, which is the rental income tax. So this is just tax that is charged upon an income from rent. We also have the VAT. So the VAT in full is the value added tax, and it's a tax that is charged on supply of taxable goods or services made or provided in Kenya. And then we have the excise duty. So this is the excise duty is tax that is levied upon goods that are manufactured in Kenya or even imported into Kenya. And these are goods like mineral water, juices, etc. Like this they could be the small goods. And then we have finally the capital gains tax. So the capital gains tax is tax that was introduced in 2015, and it's tax that is charged upon profits, so profit that comes from sale of movable property, in short land, etc. It has to be movable property. So this tax is charged at 5% of the profit that you make from selling a property. So if a seller if a seller has sold land and has made profit out of it, the profit will be subtracted from the selling price, and then that is what will be used to calculate the capital gains tax, and it's calculated at 5% of the profit. So those are the 5 classifications that we have for tax. Thank you for watching. Until next time, shalom.
Hey guys, just a reminder that you have exactly 6 days to the 30th of June to file your returns. Check out the next video on how to do so.